The secret to a loan modification and the strategy of getting a loan modification approved on your own is knowing the basic guidelines. The first and foremost to understand is that it's all a numbers game. There is no haggling between you and the bank at all. It just doesn't exist. It just comes down to, does it make sense on paper? What you need to do when you're putting together your financial statements and your formulas is remember this rule of thumb that they will gauge your modification on 31% of your gross income would be pretty much the lowest they would factor as in your new modified loan number, as in your monthly payment. I'll give you an example. Let's say my gross income per month is $3,000. 31% of that is $930. Let's say my loan is normally $1,500. As long as when it comes to my financial sheet, there's a high probability that I could actually get that modification for $930. The only time that would actually get rejected is that if let's say my mortgage payment is $1,500 and 31% of my gross income is below half of that, meaning that my 31% of my gross income is below $750. I will get rejected on a loan modification because I don't make enough money. So there's two key factors, is you're either gonna be making too much or not enough. And that's where the 31% will actually help get you, basically dialed in and focused on at least some type of heads up when you go into a modification. I talk to enough people all the time that are like, yeah, I've been rejected. I ask them, what's your gross income? I do the math, with them right there on the phone. Then I ask them, what's your current payment? And in most cases, the 31% is higher than what their current payment is. That's why they're getting rejected, because the bank says you're making enough. Or the other scenario is they're on disability or unemployment, and that's just not enough money to come in. So that's where you need to factor out. Once again, key thing, remember, take your gross income, times it by 0.31, and then divide it by 12. And that will give you your monthly. The other secret strategy when it comes to your modification, when they ask you to fill out a financial sheet, it's very important that you are being as forthright as possible. But I advise all clients to take when it comes to utility bills, all their expenses, take the 1 month that's the highest and use that. Because it's in our nature to try to shave on our own. But unless we were already great at managing our money and we didn't have, the hardship that's come into our life that put us in this situation for modification, you still need to end up putting it all on paper. Because it's easier to get rejected on a modification and to try to come up with more money. Because the key element is, or at the same time showing them how, okay, maybe I'll discontinue my cable, or I'll get a cheaper cell phone plan, or I'll do things of this nature. It's really a balancing act. And so therefore, you do your best in your first application. If you get rejected, find out why, and then overcome that objection.